This is Trip here, and this is part 2 of my webinar. In part 1, I covered analyzing an index fund. In part 2, I'll cover analyzing individual stocks and whether or not they might be good investments for you or poor investments. In part 1, I covered analyzing a specific index fund, which was VTI. I had the top 10 holdings up here of VTI. And today I'm going to look at, with you, analyzing 4 of those top 10. I've got Apple, ExxonMobil, Amazon, and JP Morgan Chase up in separate tabs here. Well, let's move right in. So first, let's take a look at Apple, if the browser cooperates. Okay, there we go. It's got a current share price close to 118. It has many of the same numbers that we were seeing on the index fund. The previous close, the open, the bid, the ask, the days range, 52-week range, volume, and average volume. So I'm not going to go back over those. I encourage you to refer to part 1 of the webinar to learn what all of those numbers mean. But there are some new numbers here when assessing an individual stock. There's market cap. And in the case of Apple, it's $628.73 billion. All that means is you take the current share price, which is $118 roughly, multiply it by all the shares outstanding in the market, and it tells you what the market capitalization is. You just multiply those two numbers and gives you the market cap. The bigger the market cap is, the bigger a part of the U.S. economy the company is. Anything over 10 billion is considered a large cap stock. Between 5 and 10 is mid, and below 5 billion is a small cap stock. The beta for this stock is 1.44. For VTI, it was 1.02. What this tells you is that Apple, as an investment, is going to fluctuate or be a bit more volatile than VTI is. That doesn't surprise me one bit. PE ratio. It's perhaps the most important number that I look at when I'm assessing an investment. And that means price to earnings ratio. The TTM means trailing 12 months, the past year. 14.19. Okay, well, what does this number mean? What it means for me is investors on the whole are willing to pay $14.19 for every dollar of earnings per share that the company's made in the last year. So the lower the PE ratio is, the cheaper the stock is on a relative basis for what their earnings are. When I'm looking at a company, I want to know what is that company's potential to earn money. I'm buying a part of that company. And as an investor in that company, I expect that company to make money. So I like to see generally a lower PE ratio here. Earnings per share. It's in the trailing 12 months is $8.31. So you take that $118 share price, divide by 8.31, and you'll likely get a number that's really close to this 14.19. Earnings date, January 31st, 2017. This tells you the most recent upcoming quarterly earnings announcement is going to be pretty soon here, in less than a month. Most companies have to report their earnings quarterly. Dividend and yield. Dividend is $2.28. That means if you own this stock, you're going to get paid $2.28 per year in dividends, and its yield is close to 2%. The ex-dividend date, for some reason, they don't have it filled in, but there is a difference between the dividend date and the ex-dividend date. The ex-dividend date tells you what date you have to hold the stock in order to receive the dividend. And then the dividend date is what date you actually get paid the dividend. And there can be anywhere between 2 weeks and in some cases like a month and a half between the ex-dividend date and the dividend date. The 1-year target estimate is where they Average median analyst thinks this stock will be in a year. I don't put a whole lot of credibility to this number. Let's zoom out a bit here. There's some more information I want to show. Here we are. So we were looking at all the summary information. Let's dig in further and look at statistics. Okay, so this gives you more complete information on the company. Forward PE is, they're projecting that the earnings for this company are going to go up and drive the current PE ratio down to 11.7. So once that happens, or if and when that happens, what you'll see is the stock price will tend to go up and keep a pretty similar level to the current PE, the trailing PE. Price to book is another key number I look at. So the book value of a company, it essentially tells you what that company is worth if you were to boil it all down, sell off every part of it. And so investors are paying almost 5 times what the company is worth to be able to buy into that company. I tend to like to see a number below 2 here. I even prefer numbers below 1. That's a bit hard to find. 1.5 is pretty reasonable as well. There's a lot of numbers here. I'm not going to go into every single one, but some of the ones that I tend to look at pretty closely are the total cash that the company has and the total debt. I don't like to see heavily indebted companies. I much prefer to see a cash number that is above the debt number. I like to see debt below the cash. Another key number that I look at is the payout ratio. This tells me what percentage of the earnings are paid out in dividends. I like to see a number below 60% here, because once it starts climbing above 60, that dividend, I then consider it to be unsafe or at risk of being cut or suspended. And when dividends get cut or suspended, it hurts the share price. The short ratio is another thing that I look at. This tells me what percentage of the shares out there are being sold short. People that are betting the stock is going to go down. That you can see higher numbers here for certain stocks. Higher doesn't necessarily mean a bad thing. It just means there's a lot of people betting the stock will go down. But if the stock starts to go up for any reason, they can actually be forced to sell out of their short positions, driving the stock up even further. That's called a short squeeze. Okay, so I've covered all the numbers that I wanted to cover on analyzing Apple stock. If you want to learn more about what all these other numbers mean that I didn't cover, I encourage you to check out books from your local library and read on assessing individual stocks. There's plenty of great books out there. But now let's just look at some of these other stocks I pulled up. ExxonMobil. It's got a PE ratio of 41.4, much higher than Apple. I would consider that unfavorable for buying this stock at this time, but it's got a higher yield. So that's a positive. Let's go on to Amazon. Wow. Oh my goodness. A PE ratio of 182.36. I wouldn't touch this stock personally. I don't want to be paying 182 times what the company's earning. And it pays no dividend. Wow. And it's volatile. Okay. Let's look at JP Morgan Chase. This PE ratio is very similar to what we saw with Apple. And its yield is slightly higher than Apple's. And it fluctuates a little bit less. So these are just some things that I would look at when assessing each individual stock. Let me just show you one more thing. This is the interactive chart, which you can see what the dividend payments are. This is really cool. You can just go back in time and see what the dividend payments are. You can see the dividend is increased from 44 cents to 48 cents, and it was 40 cents back here. I like to see encouraging dividend growth that's been consistent over time. Thank you.